Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now, historically, the summer months between June through to August, they have always been considered one of the most lucrative periods of the year for commodity traders, and so far that trend is definitely living up to expectations. There's no denying that June, it started off with a bang, which brought with it a series of extraordinary money-making opportunities, from hotter than expected economic data to stubbornly high inflation and a brewing US debt crisis to rapidly rising recession risk. And just in case that wasn't exciting enough, traders, they're now on the cusp of being gifted with even more lucrative money-making opportunities, with talks of central bank rate hikes from the US Federal Reserve, European Central Bank and the Bank of England, amongst others. Over the past 16 months, 60 major central banks across the world, they have come together in a coordinated global effort to roll out their most aggressive interest rate hike campaign in history. And so far, their efforts to cool the economy and lower inflation, that has barely made a dent. Inflation is proving resilient. Whilst they may not wish to admit it, conclusive evidence shows that the task of lowering inflation, that has become a difficult challenge for global policymakers, signaling that the era of stagflation, that could be on the horizon. Now, looking ahead, all eyes will be on the Federal Reserve and the policy meeting on the June 13th through to the 14th to debate their next rate decision. In the lead up to the hotly anticipated FOMC policy meeting, several top Fed officials, they've endorsed the need to continue raising interest rates as insurance against inflation, a move that would lift the federal funds rate to the highest level since January of 2001, up from nearly zero earlier last year. Those odds, they surged after non-farm payrolls data that showed the US economy has continued to defy expectations by adding 339,000 new jobs in May, more than twice the expectations, which has prompted criticism that the Fed's ongoing efforts to slow down the economy and tame inflation, that is failing to have the desired effect. In addition, OPEC's recent decision to cut global output in an effort to increase oil prices, that has only added to concerns and made the Fed's job of lowering inflation even more challenging. With the Fed's credibility at stake and inflation still well above their 2% target, there's now a huge pressure on policymakers to stay on course in their fight against stubbornly high inflation. One of the biggest macro releases that traders will be watching out for is also the US Consumer Price Inflation Report, which is due out on Tuesday, one day before the Fed's rate announcement. The Federal Reserve's decision will ultimately hinge on the upcoming inflation data. If that data beats expectations, then the odds of another rate hike on Wednesday, they're almost guaranteed. However, there's a problem. Current economic and financial market conditions, they can't handle any more rate hikes. After 10 consecutive hikes, the Federal Reserve has increased interest rates well into restrictive territory. The further they go into restrictive territory, the more likely it becomes that we begin to see black swan events, just like we've seen recently with the second, third and fourth largest bank failures in history, which have all occurred in the past 3 months. Those hikes, they've also pushed mortgage rates up by more than double. Credit card debt has surpassed 1 trillion for the first time ever. Bankruptcy filings are at their highest level since 2008. Whilst overly inflated assets such as real estate and equities, they are beginning to wobble. Most economists, they've long felt that the Federal Reserve has gone one rate hike too far, and now with the odds increasing of another rate hike this week, the biggest risk is that the Fed may overdo it. Since the beginning of the year, a long list of Wall Street banks, from Goldman Sachs to Bank of America to Citigroup, they've repeatedly described commodity markets as their preferred asset class over the next decade. Last week, JP Morgan, they announced that they've been advising their clients to dump equities and rotate capital into commodities, ready to profit from the big magnitude of events that we have currently unfolding. And they're certainly not alone. Data shows that nearly 3/4 of central banks, they're now turning towards gold to hedge and safeguard against the risk of monetary policy error, which is just ironic because some central banks, they're buying gold to protect themselves against the consequences of economic crisis and turmoil that they themselves are creating. According to a report by the World Gold Council, 71% of global banks surveyed said they plan to significantly increase their gold purchases over the next 6 months by an estimated total of 700 metric tons, worth 49 billion this year alone. Whichever way you look at it, one thing is clear: central bank gold demand that is influencing sentiment and driving market dynamics. Right now, central banks are not only net buyers of gold, but also record buyers, and this trend is not going anywhere anytime soon. Traders and investors, they should pay very close attention to the bullish trend that is emerging, as it has huge potential to move the market significantly. The bottom line is that central banks, they're buying gold for the same reason as everyone else: to protect their purchasing power, diversify their wealth, and capitalize on high returns on offer in the current economic climate that we find ourselves in right now. But make no mistake, this is not a buy and hold market. These exciting and fast moving markets, they create in the most optimized environment for traders. So far this year, we've seen commodity markets notching up explosive double-digit gains to the upside and the downside in a single week, not once, not twice, but on multiple occasions. For traders, making money in these markets has never been easier. The week-to-week short-term macro-driven opportunities that we're seeing right now, they can literally be described as buy low, sell high, rinse and repeat, and do it all over again. So take this month, for example. We've seen huge explosive moves on every commodity imaginable, from the metals to the energies to agriculture, which has gifted traders with endless opportunities to capitalize on both sides of these big market moves and to generate gains of 10% or higher in a single week, sometimes in a single day. So just think about that for a second. In today's inflation adjusted terms, your money sat in the bank will not even earn that return in a year or even 5 years from now. That's why it's no surprise that banks around the world, they're struggling to retain deposits. Logically, it makes no sense why anyone would want to leave their hard-earned money sat in the bank on a near 0% interest rate while simultaneously allowing inflation to devalue their purchasing power, when they can achieve weekly returns of 10% or higher by actively managing their wealth through trading. Right now, we have crisis on top of crisis, which, as traders know, this translates to opportunity on top of opportunity. This is the time that traders, they wait decades for, because it's times like these that make millionaires and billionaires out of regular people. Definitely do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit, which we've transparently documented through our weekly videos. So if you're trading at one lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures this quarter alone. Historically, each time commodities, they've started the year on a positive note, they've always gone on to finish the year outperforming every other asset class out there. These past few months have just been a taster of what is yet to come. And if you want to take advantage of these extraordinary markets and huge money-making potential on offer, there's no better time than now. Go to jointhegoldandsilverclub.com to learn how a mentorship program can take your trading to the next level. Investing in yourself, it is the best investment you will ever make. Your future, it is created by what you do today. Make investing in yourself a priority, because nobody else is going to do it for you. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. So as we were discussing last week with you on the reports, we've taken the opportunity last week on the break all the way back down towards 1 month lows here for gold to sniper in. In fact, that trade at the moment is up 150 points into Friday's close. We've also taken the opportunity to bank more profits here on copper. So you'll note copper is now broken out to 1 month highs. We talked you through this trade opportunity on copper in a lot of detail throughout the month of May into the beginning of June. Expect copper to outperform. Copper has indeed done that. It's outperformed gold, silver, platinum, and palladium. Copper has been the strongest metal here, certainly over the last 2 to 3 weeks, breaking all the way out to 1 month highs just on Friday. So as you would imagine, we've banked more profits with our clients at the Gold and Silver Club on Friday, banking into strength as we were seeing the breakout on copper all the way up to 1 month highs. So all of the trades are protected and we continue to bank on strength here. Now moving over to platinum, we discussed this with you previously. We continued to sell platinum throughout the whole month of May here, which turned out to be a fantastic opportunity, banking over $1,100 130 points on the sell side here. A market which I will put on your radar going into next week is actually palladium down at these levels right now. Palladium on Friday broke all the way down to 4-year lows. I would have this on the radar going into next week. It's trading just above 1,300 US dollars per ounce. We've had a 3-day impulse move, taking out the price swing lows here, flushing all the way down to 4-year lows, and now we're getting a nice setup as we go into a very heavily news-driven week. One of the important points to be aware of as it relates specifically to the energies as well is not only have you got CPI data on the Tuesday, you've then got Wednesday's FOMC statement, Thursday's European Central Bank, you've also got Friday's quad witching. So this is what happened last quarter on the quad witching for oil. Coming into that week, oil started breaking down very severely, and it broke down over 1,000 points from the Monday to the Friday, when we then had on the Friday the quad witching, and that was the lowest close actually that we've seen so far in 2023. So I would definitely have that on the radar, because you might well see another cascading sell-off for oil as you go into next week in the lead up to quad witching on the Friday, which could present you with better opportunities to sniper in if we do see it break down as we go into next week. Silver as well, very much like gold, we've caught the breakout on the metals here as we went into Thursday through to Friday, where gold essentially broke out 1%. We've also seen silver have a similar magnitude of a move as well, breaking back out towards 1-month highs too, alongside copper, of course. So we're already seeing copper, gold, and silver. They're getting a bid in the lead up to next week's events. Now, typically on the CPI data, many times over this year, gold does actually break out on that news item, and then it's the following day on the FOMC statement or on the European Central Bank, where then you can get the pullback. So typically, the way we're looking to play it is if we do get a breakout in the lead up to that on the Monday and through to the Tuesday CPI data, and potentially even after that later on in the day as well, this is where I'm looking to scale out and bank profit as we get breakouts to the upside, banking into strength there ahead of some of the very volatile news items that we've got this week. It's just going to offer opportunities to do two things next week. One, bank more profit on the longs that we've got here on the metals if we certainly get further impulse moves higher and spikes on the CPI data or FOMC statement. Equally, if we do see sell-offs, for example, on the energies, crude oil in particular, as we go into later on in the week, especially after the European Central Bank announcement on the Thursday, but more notably on Friday's quad witching, then we're going to be gifted with opportunities as well to sniper in at lower prices on the potential for another large sell-off if we were to see a similar price action to what happened going back to the quad witching we had in March as well. The setup on energies in particular is one of interest, especially as we're heading into the peak demand for the summer driving season, especially in the USA, where you're going to get a lot more gasoline demand at this time of year. And typically, once you get through the middle of June, into the end of June and into July, energy prices, they then typically recover and offer you some really great trading opportunities. And whatever long-term goal you're looking to achieve through your trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to really give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success is not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, then the odds are already stacked up against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive research-driven approach that is never taught to retail traders, only reserved for professional traders in the banks, hedge funds, with access to powerful game-changing insights, including where the banks and hedge funds where they're buying and selling in real time, alongside the key liquidity zones so you can enter and exit the markets with pinpoint precision, learn the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, quarterly, real-time data-driven cycles, the intermarket correlations, then you need to join our mentorship program. As we head into the second half of the year. We are in one of the greatest eras of wealth creation the world has ever seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there's no better time than now. If you want to upgrade your income, then you need to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP.